afternoon. Thanks for joining the Deal and Donnelley Financial Solutions 2017 webcast, Pharma Outlook for 2017. I'm Daniel Perez, Director of Business Strategy for Venue, Donnelley Financial Solutions virtual data room and end-to-end deal solution suite. In the months ahead, pharma companies are poised to continue to see many opportunities as they navigate through wildcard issues, including the concern around drug pricing, as well as regulatory scrutiny on compliance and reimbursement challenges. Now, at the same time, many drug makers will likely remain under pressure to refill their portfolios as patents for blockbuster drugs approach the end of their lifespan, thus facing competition from new entrants. In matters of regulation, the potential for tax reform and the increasing odds that drug makers are permitted to repatriate huge sums of trapped cash overseas could prove to be a major capital driver for the industry. In other words, big pharma may have even more fuel to go after smaller players, unless they simply opt out to reward shareholders with higher dividends and stock buybacks. One way or another, demand for healthcare and new innovative therapies isn't going anywhere. Joining me today to discuss this and much more are Christopher Missling, President and CEO of Anavex Life Sciences Corp., Kara Murphy, partner at Bain & Company, and James Saperstein, CEO of Contingent Pharmaceuticals. Now, we'd like everyone watching today to be part of today's deal-making conversation, so please submit your questions just to the right of your browser. So let's get started. So James, I'm going to start with you. The public outcry around drug pricing is poised to remain front and center with the new administration calling for lower drug prices, but has offered few details. How do you think this is going to influence drug pricing and reimbursement approaches for the pharma industry in the months ahead?
Well, first I want to thank you for allowing us to join the panel and discuss these very vital issues. In terms of the new administration, we just had some pharma CEOs meet with the new administration last week. I think the argument the pharmaceutical industry needs to start making is really what is the cost of healthcare and what's our contribution portion to it. I know I started back in the industry back in 1984, and we were about 8.5% of the overall U.S. dollar in terms of healthcare costs, and now we're about 9.5%. So the actual increase in pharmaceuticals hasn't been that great in proportion to the overall healthcare dollar. However, I think the argument that you're going to start seeing moving forward is that there's a lot of variable costs to the healthcare dollar. You've got PBMs that have a big piece of profit in terms of the healthcare dollar. You've got insurance companies that, based on denials of medications or whatnot, help improve their profit margins if they can deny people for a month or two. You're going to start seeing the pharmaceutical industry talk about these types of things. And we also will be talking about the differentiation between the companies. You have innovative companies such as large pharma, biotech companies. You have specialty pharmaceutical companies, which quite frankly take older products, combine them, or just take older products and move them forward. And you have small, micro-cap, mid-cap companies that have one or two products in their portfolio that are spending a lot of time and money and taking all the risk, quite frankly, to fill future pharma pipelines. So I think that's what you'll start seeing, some different arguments being presented moving forward. But I don't really think you'll see a lot of momentum on driving prices down from the pharmaceutical perspective. You've already had a lot of large companies come forward and say, we're only going to have single-digit increases over the next year and the year after. You'll see a lot of that happening, I'm sure. But at the end of the day, we're one of the most, one of the biggest and best industries in this country, and we need it to be vital. And people complain that we're funding healthcare or research for the rest of the world. Well, someone needs to. If not, there aren't going to be any new medicines. So I think we'll figure out a way to make it affordable for everyone, and we're hoping to work with the new administration to do just that.
Great.
I mean, I agree with that, and I would say it's not even fair to take a kind of one-size-fits-all approach to drug pricing, right? Because there are drugs out there that are truly life-saving and truly innovative that merit a certain reward or price for what they're delivering. And then there are more kind of commodity offerings, and obviously we've seen a spectrum out there of companies maybe taking advantage of certain product opportunities where there isn't as much differentiation. Could we see more pressure in those categories? Perhaps, but do we think that some of the innovative categories are going to still be rewarded for all the innovation they're delivering? I think absolutely.
I think we also have to look at the entire sector. So it's not only pharmaceuticals, but it's also the services, it's the hospitals, is all these redundancies which might not be perfect today. And I think it's important to look at the overall cost basis before making or rush to a decision about how to adjust those things.
If I can finish the point too, I agree completely with what both of you are saying, and I would add to what Christopher just mentioned, the cost of doing clinical work is just becoming really far more expensive than we even have forecasted in the past. And that is working with CROs and working with all types of clinical trials. Phase 1s are more expensive than they used to be per subject. Phase 2s, phase 3s, everything is becoming more expensive. We talk about FDA, and I know we'll probably talk about this a little later as well, some of the regulations that are put in place, and you've got to go above and beyond where you used to years ago, and that there's a price to be paid for that as well. So I know the argument has been, well, companies are spending X amount of money on marketing and we shouldn't be doing that, but truly I can tell you bringing a drug to market back in 1984 was about $200 to $300 million from the inception, from discovery. Now it's in the multi-billions in a short amount of time, and it's only going to increase. I don't think the costs are going to go down, and it's not just the pharmaceutical companies. I agree with you, Christopher. It's the whole ecosystem that we need to look at and how to approach that.
Great.
And the trick is, I think pharma is only, 9% of the spend, but over 50% of the industry profit pool. Mm-hmm. And so you could debate, should the providers be more efficient? But people look at it and quickly attack pharma because it's so rich in the profit pool. And so there is that fine balance where you should expect continued tension, but it shouldn't, just solving the pharma pricing problem isn't going to solve the whole healthcare cost trend, just given where most of the dollars are.
Mm-hmm. Wow. Well, so Kara, sticking with you, what about what we're seeing with the administration pledging fewer regulations and more competition for drug makers? Like, how do you see that affecting the industry?
Yeah, I mean, I think the bottom line is we expect that players are going to have to up their game strategically. I think at Bain, we've been spending a lot of time focusing on this concept of category leadership and portfolio focus, which is ultimately, if you focus in certain categories of treatment, and if you have a portfolio that's focused maybe in a few pockets, you are going to drive differential returns because focus rewards you in terms of where you're doing your R&D, how you're cultivating your business development as well. And we've actually looked at the returns that category leaders and portfolio-focused players get on a relative basis versus more diversified players. And a focused leader could be getting a total shareholder return in the close to 30%, while a diversified player is more, 10 to 15%. And so there's absolute data out there that kind of says focusing matters. Mm-hmm. And these guys could chime in because I think your companies in some ways are the epitomes of focused leadership.
Absolutely. I mean, the key is also to differentiate between incremental improvement and breakthrough, changes of quality of life, treatments, and treatments which are really disease modifying. And those definitely, have to be, put into perspective. So it's really to be looked at in that way.
And I think as certain discoveries are coming forward, like CRISPR and those technologies, you're finding out that one size doesn't fit all in terms of clinical development and research. Every patient is different. So you need a healthy competitive landscape, and from a regulatory perspective, you need to be able to nourish that, because there are some products that may not be as highly differentiated as some others, but might be useful to some patients. So I think the regulatory folks, they're going to have to get their heads around that as well. And I think you're seeing improvements. I think the FDA is doing a great job trying to get more products out there.
Definitely will. So Chris, how potentially might an easier FDA approval process create risks for the industry?
Well, I don't know about, we have to frame maybe the question, what does it mean and how are they going to change things? So if they will improve the timelines to decide when to approve a drug and to streamline the times, and there's a redundancy in the process, then I don't think they will allow, and I have a high respect and high regard for the agency, that they will never reduce their threshold of safety, for example. So I don't think that there will be a risk. When you refer to the potential of, having more projects with less resources, then it might be a fact that it could be something that could be slipped through, or there's a off-label use which might be used as worldwide experience. I think it has to be made sure that this is under absolutely high guidance of the FDA. And again, I believe they're making a fantastic job so far in approving drugs which are really needed very quickly, like we see that in oncology, right, in another rare diseases. But again, I don't think that this can be compromised.
Great.
And should be compromised.
So looking at big pharma, they've continued to show an appetite for oncology and immunology assets. James, do you think these subsectors will continue to remain an area of focus?
Yes, I do. I think bridging what Christopher said, you're seeing a lot of combination therapies in oncology, and you're seeing a lot of targeted immunological agents coming out and forward. So my background has been in infectious diseases, and I worked in HIV for a big part of my career, and we were really the first ones to start looking at combination therapies to resolve the AIDS crisis back in the 90s. I think you're seeing very similar going on in oncology right now. So where you've had a lot of small biotech players a decade ago, you're seeing large pharma getting involved. They're taking far more risk. They're buying or acquiring earlier stage companies to see what future combinations they can come up with. And I think you're going to see just a huge rainbow of types of combinations coming forward. And you're going to start seeing a lot of resolution in different types of cancers and immunological types of diseases in the future. I think there's a lot of, again, profit to be made there, and I think that's the driving point. These products are not inexpensive. There aren't, when you start subdividing the types of cancers that are available out there for patients, there aren't huge populations, so that's what's going to drive it. They're going to be very expensive drugs, but huge profits available.
I think we have to look at the outcome. This goes really into personalized medicine. And that means that those patients really benefit. So we have now in the past had 50% oncology improvements. Now we have 95% or more with these specialty treatments, immunostimulation. So that really speaks volume about the change of the ability of therapeutics to address diseases.
Mm-hmm.
So Kristen, what about lower volume and specialty and rare disease drugs? Do you expect these sectors to remain an area of focus?
Yeah, we actually at Anavex are actually focusing on rare disease as well now. And what many don't know is actually that rare diseases actually, there are a lot out there. There are 300 people with rare diseases worldwide. And actually, I just saw that there are 95% of rare diseases have no FDA approval. There's still a lot needed, and these are high unmet needs. And also children account for 50% of all those rare diseases. And considering that this is a practical information that in the last 5 years alone, 1/3 of all the approvals by the FDA were for rare diseases. That shows that there is certainly a continuation, should be a continuation of that, because it really truly addresses unmet needs. And again, that speaks to the ability to address personalized medicine needs.
So Kara, what other subsectors or drug specialties do you think we'll see deal activity heating up in?
Sure. I think I'll call out a couple in the near term and a couple in the long term, and you guys should definitely pile on. I think in the near term, a lot of folks talk about multiple sclerosis, right? The fact that we're getting next generation treatments out there. There have been a lot of treatments here for a while, but these kind of next generation treatments for the progressive disease are definitely a sector to watch. I think secondarily, we'd call out migraines. I think the CGRPs are coming out. They're kind of a breakthrough treatment, launching into a very intensely genericized landscape, but it's a premium treatment at a premium price, and there are at least 4 guys launching in the category. And so I think there's an open question of, is that going to evolve like the PCSK9s or not? But that's definitely a category to watch as well. I think long-term would call out Alzheimer's, right? It's a huge market opportunity, huge unmet need. Obviously, folks like Biogen have had some early successes, hopefully more successes to follow here. And so that absolutely will continue to get focus. And another one I would call out is addiction. Obviously, more and more press around addiction and the recognition that substance abuse is a disease. And while we might have had historically treatments for smoking cessation and alcoholism, I think that whole next wave of addictions are getting more focus, and that's going to be a long-term opportunity as well.
I think it's interesting to note that, Karen, all the indications you mentioned are all related to the brain, to the head, to the brain. Yeah. And what's really fascinating is the advancements of the medicine has been extremely successful in evolving to take care of all body aspects. HIV is now chronic disease, certain cancers become chronic diseases. We also see that heart diseases are with pacemakers and other things being taken care of. But the brain seems to elude our ability to break into that because of its complexity, I guess. So I think dementia, neurodevelopmental and neurodegenerative diseases are really at the forefront, and that includes Parkinson and Alzheimer's especially.
Well, one thing I would add is I think you're going to start seeing a combination of therapeutics and medical devices, more so in the future than we've seen in the past. With the artificial pancreas, things of that sort, and do you want to put some kind of medications onto that pancreas to make sure that it's working? And then that's all future generation type of things. But I think you're starting to see Big Pharma look at how they can partner with medical device companies as well as people are becoming more bionic, sort of say. But I think that's the future as well.
So then what's your take on the odds for repatriation and the potential for tax reform?
Well, that's a tough question. So I actually sat on a capital formation committee for bio, and we talk about these types of things. We've been talking about them for a long time. I think the last conversation the administration's had with the CEOs of pharma talked about that, and I think people would love to see it. I think every pharmaceutical company would love to see some kind of form of it, and they'd have to understand how they can participate in it. I really don't see that it's the odds of success are very high. A, it's complicated. B, there's always going to be people arguing from one side or another saying that the tax rate's not high enough. They should do more with that money, or they should spread it through dividends, or they should spread it through new jobs. And I don't think because of antitrust issues that you're ever going to get the pharmaceutical industry to agree exactly on how those funds should be used. And unless this becomes kind of like healthcare reform, it's something that goes through one or two administrations, I don't really see that it's going to be successful. Just my opinion.
Your opinion.
It's also so complicated because we talk about double taxation treaties, which have to respect it. So it's not only one country making the decision. So that makes it certainly interesting and complex.
Well, sticking to that, Kara, can you comment on how you think Brexit is going to
You're asking us all these tricky ones. Yeah, no, so I mean, I think no one fully knows, but I think I'd call out a few themes or open questions. One around regulatory bodies, two around price, and three around just innovation concentration. I think from a regulatory standpoint, right, having NICE plus now the EU, there are additional regulatory bodies to get your products approved for. I think two on price, to the extent that, you know, we've seen some deceleration in the pound and all of these prices are, you know, benchmarked against each other in all these different countries. I think there's an open question on what happens with pricing. And then third, on the innovation concentration, right, there's been a lot of investment in biopharma in London. And will there be more innovation movements to countries like, you know, Ireland because of the tax benefits in the language, or Germany because it's also a big market? I think these are all kind of open questions and no one knows with certainty, but there are things to think through.
I mean, it speaks volume that the EMEA, the European agency, is located in London. Yeah. So they certainly also have provided to the UK certainly some grants, as you point out, and that obviously will probably change.
Exactly.
So James, we've seen increasingly that pharma companies are teaming up with technology companies like Apple, Google, IBM. Do you think we're going to see much more of this trend?
I think this is the trend to look at, quite frankly. I'm a pharmacist, that's my undergraduate degree, and I can see even pharmacy, one point stop, shopping, kind of an Amazon.com approach to delivering healthcare. So I think you're starting to see that. I think even from one end of the spectrum, the sales and marketing end of it, you're seeing big pharmaceuticals doing direct-to-physician contact through Google, with very specific messages for those physicians. I think as things start flowing and how are we going to reduce the healthcare dollar, really technology is going to be one of the strongest answers to that. So as we start figuring out this continuum, I think you're going to see a lot of development here. Google Health is spending a lot of money, a lot of investment trying to figure out how they can help answer the questions for the pharmaceutical industry. So yes.
I think we have to look at what these collaborations are doing, and mostly they are basically mining data, right? Because the technologies today allow to do that, and I think that's really extremely important. So we also at Anavex doing the same. We're really mining data very heavily, and I totally agree with you. That is really where the information will come from eventually, and that should be continuing.
So, Kara, what about the M&A front? What are you expecting to see there?
Yeah, so I think it's a question of how much M&A, and are we going to see large-scale deals or tuck-in deals? I think we should continue to expect a lot of M&A, right? Especially if we, again, put on this lens of category leadership and everyone wanting to build up their portfolios in certain areas and, frankly, fill any gaps with respect to a pipeline and potentially divest things that are non-core. I think when we've actually looked at these, mega deals that take place, and if you actually look at what the $35 billion plus pharma companies have created in terms of value versus the maybe mid-size, the $5 to $35 billion companies, you can't look at that and unequivocally say, oh, big mega deals, deliver a ton of value. It actually would be kind of the opposite. I think some data out there would say that the smaller guys are delivering different total shareholder returns, and I think. And so as a result, you'd start to say, I wouldn't necessarily say these mega deals are a good thing. I do think that we're going to see a ton of tuck-in deals. Again, if this notion of category leadership and building up that string of pearls to assemble dominance in categories that are really interesting, like rare diseases.
Great.
I think that, and I come from Big Pharma and I'm now in biotech company at Anavex. I think the key is to understand that it's not disparaging to Big Pharma, but because they are moving just in a different path and they have to be. It's like a bigger ship. Yep. So there will be always a higher, I would say, a tendency of innovation in small biotech companies. And as long as that is taking place, then in that regard, there will be always acquisitions of novel technologies. So I'll predict this exactly, the tuck-in strategy probably to be most likely convincingly continuing.
Yeah.
I completely agree with both of you. As much as big pharmas try to find efficiencies in the way they do things, and every major pharma CEO has announced that they have a new biopharma division and things of that sort, they still haven't figured it out, and I'm not sure they will. So there is a lot of inefficiencies in big pharma, and it's just a lot easier to acquire a technology that fits in nicely into your therapeutic focus. So I think that's what's going to happen.
I was going to say, in. So, James, what role will CVRs or contingent value rights play as a means to bridge valuation gaps among buyers and sellers?
Great question. So I'm the co-founder of Tobira Therapeutics, which was just acquired by Allergan last year, and there were a lot of CVRs in the deal. And I remember getting a call from my broker telling me, what do you want to do? And I said, well, first let me understand what the CVRs are exactly and where they're placed, and on what part of the performance paradigm have they been placed, and what's the share price right now. So I needed some time to take a look at it. I think the answer to that is, if it works for Allergan, if it works for some other companies, I think you'll start seeing big pharma putting these types of, because they're really performance paradigms, right? Performance measurements, and it's as they acquire these therapeutic companies, and they're just, Allergan went off and acquired 2 NASH companies after that as well. So, but the share price is kind of maintained just below where the CVR strike is. So I think it really depends on what the investor wants to do and how patient the investor is going to be. I can tell you, I was not patient. I decided after being in the stock for 10 years, it was time for me to do something, and I sold. But others who came from my company didn't sell, and they're waiting because there's still an upside 2 or 3 years down the line. So it really depends on whether it's a private equity company or retail investor. It depends on what they want to do and what their portfolio looks like. But I still think you're going to start seeing a lot of these in the deal. I think it's a good calculated risk from the acquirer to place into the term sheet.
I think it will make eventually deal happen, because if you don't agree on the transaction numbers, then you will not be able to, you have an impasse. You cannot execute. So I think this will allow transactions to be happening. But also, especially when there are compounds which are still a little bit farther away to be really well defined in their cash flow upside potential. And that's basically probably a solution to make deals happen.
Mm-hmm.
Yeah, I mean, the deal, Sarah Pringle published a really interesting piece on this whole topic not that long ago, and it was kind of this bull versus bear case, which is, if you needed to make a deal happen, do it. If you're in the lucky position of being a seller and there's a ton of willing buyers, then maybe you don't need to do it, because I think some of the statistics show like maybe 2/3 of those contingent value rights never get executed because the milestones get missed, right? Yeah. And so it's a catch-22 a bit, but if it's choosing between not getting a deal or getting a pretty good deal done with the CVRs, it's, you lean in to do it. Yeah.
So again, sticking with you as the deal maker on the panel, what about the IPO outlook for biotech?
Yeah. I think the biotech outlook, IPO outlook remains pretty solid. I think, a bearish view would, ask, are we at a peak, right? There's absolutely been a peak in biotech VC funding. If you look at past recessionary cycles, you could start saying, gee, there's always been this dip. Will we see this dip again, right? And so you could say we should revert to history, right? And so when you look at years like 2014, you say, wow, that was quite the year, and it may be an outlier, and maybe some of the more historical average years are a better reflection of what we could see in the next couple. The bull view would say the bottom line is, there's a lot of opportunity, there's a lot of innovation. When you sit and look at it from a VC investor standpoint and look at the returns of biotech relative to other categories and the odds of home runs in biotech relative to other categories, there's a pretty compelling case for continued capital investments. And when you layer on top of that the fact that, I could have an IPO market, but frankly, there's a lot of big exits to strategics, given this whole tuck-in concept that we're talking about, I would posit that you're still going to have a pretty attractive outlook. Maybe it's not going to be always as high as it was in the 2014 timeframe, but still solid over the coming years.
And I remind all my biotech friends, we're tied to big pharma. It really depends on big pharma's return and how well they do in the near and far future, because if they dry up or their profits dry up, then our prospective opportunities dry up, and that includes IPO or M&A. So I think the pharma industry is going to continue to be healthy, and as long as they continue to be healthy, the biotech IPO opportunity will be healthy.
I also think that it's always like the specialist investors and the, I would say, the generalist investors, right? So with the specialists are in transaction that drives, but unless really the entire generalist funds are joining in the industry, then not really much happens. And I think that's really also important to look at from a macro perspective in terms of deals and IPOs, in my opinion.
Mm-hmm. So what about any other sectors within pharma? Anything interesting to look at from the IPO perspective at all?
I mean, I can talk more broadly. I think when you think about pharma, at least, I spend all my time working with investors looking at pharma and derivative pharma plays, right? And so we spend a lot of time talking about pharma. We could also talk about, generics and specialty generics. And we also could talk about derivative service plays where there's been a lot of activity, right? The CROs, the CDMOs, the CPOs, these niche, technology-enabled service and IT companies. And so I would say across the board, within the products, within the generics, within these service plays, there could be a range of opportunities, both IPO and, frankly, strategic exits.
Great. Got it. So there's a lot of public trust within the industry. Christopher, what do you think it'll take to change that?
Do you mean lost trust or?
Lost trust, I'm sorry. There's a lot of lost trust.
Well, aside from some highly publicized incidents of some price increase announcement, I think the industry might actually take advantage of what it's really doing. Mm-hmm. And I believe it's doing a phenomenal job. It's saving lives. And I'm a little bit surprised that that is not being maybe communicated or picked up on that note. Because I don't know of any other industry which is so important. If you have a gadget and you're improving a phone into the next generation phone, nobody's life will be impaired from that. You have maybe a more easy to use device, but it's not going to affect your life in terms of that prolongs life or changes your life quality. So it's really like something which only the pharma industry is able to do. And I would encourage the pharma industry to just do a better job in explaining that. And the innovation which has been accomplished with the arrival of the vaccines, with the arrival of penicillin, with the arrival of immunostimulation, oncology, therapeutics, these are really groundbreaking changes. And that is my opinion, what could be done to improve that current perception, which might be a little bit like affected by these recent discussions about this pricing.
And I would add, we have to do a far better job of explaining innovation. And if you think about the world events, the two big crises that we've had in the last 3 years have been Ebola and have been Zika, right? And who does everybody look to? They look to the pharmaceutical industry to resolve the problems. And Zika's, the solution is not too far away. So it's innovation. We can provide answers and we can save massive amount of lives. I agree with you.
Great. So what kind of pharma opportunities do you see in emerging markets?
Well, Zika is one of them, right? We just I think you're starting to see. In fact, I'm going to China in a week and a half. I mean, you're starting to see the Chinese market privatize. You're seeing a large private market being created. India, you're seeing a large private market being created. French West Africa, you're seeing a large private market being created. Markets that we've been waiting for. We've been waiting for the past 20, 30 years to actually start buying product. You're starting to see in India and China, for instance, they're much more cooperative when it comes to protecting IP, which is basically in pharmaceuticals, that's all we really have is our IP. You start there. And if people are going to violate our patent rights, then we don't have a business there. So I think you're going to start seeing China and India, the two biggest markets that I can relate to right now, more China than India. You're seeing a lot of Chinese investors coming forward and investing in U.S. pharmaceutical companies and growing their business. So to me, they were emerging markets, but now you're going to see them more become mainstream in the next 20 years.
Great. So, Christopher, many large drug makers have several key products going off patent in the near future. How big of an issue is this going to be?
It's always an issue, and that's why you see the reaction to extend product life of compounds and provide tuck-in deals, acquisitions to keep the earnings per share, numbers up, and this will be always an issue going forward. And I think what the industry also is now taking advantage of, what I understand, is the biologics, that is harder to copy and to get generic approval for those. So it's going to be always like, the time is always like a limitation of the patent protection, and that is will never go away. And I guess the industry has to address that with those means.
Great. So, Carol, what about the role of private equity in the pharma industry? What are we seeing?
Sure. So I think a few points. I think, first of all, within private equity, healthcare is a differentially strong returner. I think within healthcare private equity, pharmaceutical investing, products and derivative services is a differentially strong returner. So when you reflect on those things, I would say PE is going to continue to aggressively pursue opportunities in pharma, recognizing they're going to have to lean in because valuations are steep and, frankly, there's fierce strategic competition. But that's not going to dissuade them, right? So there's going to be activity, and we're seeing it. So on the branded product side, right, you see folks like Warburg, like Carlyle, like GTCR creating, backing management teams to create roll-up plays. You see folks like CVC backing Alvogen, which is a specialty generics play. And on the services side, you see a ton of activity, right? The CRO space. There isn't a CRO that hasn't been looked at from private equity, right? The Quintiles, the PPDs, the Inventives of the world. Again, the CDMOs, we've seen a ton of activity there, right? Capsugel recently traded. There's the Catalents, there's the Patheons of the world, PCI on the CPO side, and then even some of the more technology service-enabled folks, the niche players like the ERTs and the Bioclinicas of the world. And so all of those spaces have private equity investment in them. And I think private equity is keen to figure out, are there ways to partner differently with pharma? And so is it backing these management teams? Is it taking carve-outs out of assets that are less core to pharmaceutical companies? Those are the tricks on the product side. And how on the generic side do you compete against some of these scale players? But I think in these niches there remains opportunity, and there's a vibrant set of opportunities on the services side.
So, James, can you comment, in light of recent reports that Gilead is slowing or declining, where are you seeing opportunities in the global hep market?
Well, specifically to our company, I think we're well positioned moving forward. We have a product that's actually going to compete against theirs, but we're looking to make sure that not only we resolve some of the efficacy issues, but the long-term combination issues. So Hep B will be like HIV, like Hep C, like we see in oncology, it'll be a combination. Everyone's looking to get towards the cure. There's 350 million patients infected with hepatitis B around the world. It's a huge number. To put that in the sense of scope, 34.7 million infected with HIV, so it's a tenfold increase. So there's a huge opportunity there. And what's different this time around with HIV, as opposed to HIV and Hep C, is it's not just biotech companies doing this. Big pharma's jumping in head first because of China and India and some of those large markets where combination therapy, everyone's looking for the cure. That's where all the investment. There's over 40 companies invested in this space right now.
So can any of you comment on if you expect acquirers will continue to offer CVRs, which we talked about earlier, to bridge the valuation gap when going after risk-heavy assets?
I mean, I think we expect that will persist, right? I think for all the reasons that we talked about, like a CVR makes sense when it's a riskier, early stage, less proven technology, right? And it starts to become, what deal are you bringing to the table relative to the other guys? And so I think we're going to see that persist.
Can you comment on any of the challenges financially that these financial instruments might create?
I think the challenge is it's confusing to investors. I think from the acquirer perspective, it makes perfect sense, and even for the seller, it makes sense, as we talked about before. I think investors are confused because most investors don't spend a lot of time reading all the scientific data behind the technology, and there's so much risk. And I think I don't know if the appetite is there to wait 3, 4, maybe 6 years for some of these readouts to happen. But I certainly understand why pharma is doing it. Pharma was far less risk averse in the 80s and the 90s when you were looking at an M&A strategy. They got a little bit risk averse after the 2008, 2012 timeframe. So now I think the CVRs is kind of a healthy mix right now in terms of trying to downplay the risk ratio.
But maybe if the FDA processes are streamlined, maybe that is not as necessary, because then the investor is more inclined to wait. Maybe it's going to be 2 or 3 years instead of 6 or more years.
Right.
So we've talked some about the economic and regulatory issues with the new administration, but for life science startups in general, how do we see the regulatory issues that we're facing affecting startups within the industry?
Well, look, Congress just passed the 21st Century Cures, which President Obama signed into law before he left office. And I think it's an amazing bill. It'll provide more funding for the NIH. It'll provide more funding for FDA to hire more people. It remains to be seen what's going to happen with this current administration and what they'll do. Our hope in the biotech pharma arena is that we fought very hard for that type of bill because we need to advance our products and keep things moving forward. The public isn't aware that, for instance, we have user fees that have gone tenfold increase from when they started in the 90s, where we actually, just to apply to register a drug is well over $1 million at this point. So this is the 21st Century Cure applies some more funding to above and beyond the user fees. So I think from our perspective, we need a healthy FDA. We need scientific rigor. We need them to ask the right questions, but we also need to streamline some of the regulations as well, so then that we're not answering the same questions 3 and 4 times over. For instance, they may, from the preclinical perspective, just to give an example, sometimes they might come back because the rules and regs changed in 2017 as opposed to what they were in 2015, and you need to do some more animal tox studies. Well, those animal tox studies might cost $5 to $6 or $7 million and might delay your program for 2 years. And that's kind of what the public doesn't see. So we need regulations that make sense. We need regulations that are discussed fully with the people that they're regulating. We are the most over-regulated industry by far of any sector in the world. And adding more regulations certainly isn't helpful, but more discussion on those regulations is.
Great.
There's also another element which I found in this 21st Century Act is that the requirement to have an interaction with the patient and with the sponsor and the patient. And I think that's a good idea. It's a bit like, you're asking, your customer, what you really need, what you really want, what really is needed for you to improve. And it also raises the bar for the treatment. You cannot just provide an incremental measure which is not really picking up on a patient's perception, but only has a significance, but it doesn't really improve anything for the patient itself. And that is really important, that you really want to have a treatment which improves lives, improves the patient's perception of life, and that is the difference of innovation compared to incremental, advancing a compound.
So, Kara, I took a note when you were talking about M&A, and you talked about some of the non-core divestitures that are happening. Any areas in particular that we're seeing that happening a lot?
So I think you guys should comment as well. I think it's kind of across the board because every company is looking and saying something is non-core to me, but could be core to somebody else. And so it also brings up this whole concept of, should I divest it, or are there asset swaps, right? You know, animal health's a classic one. Some people want to be in, some people don't want to be in, and there's asset swapping taking place. I think the other thing, as you look to divesting, in general, they're often more established brand products, maybe products that are, you know, got good cash flow, they're on the market, but maybe non-core. I think it starts to be harder to divest a bunch of, you know, preclinical or early stage compounds if you really believe there could be some good potential to them. And so in terms of the takers, from a financial investor side, they're going to look more on the established end. For the, you know, strategics, they're going to be more looking at the earlier stage end or the asset swap end. I mean, to do the asset swaps. I don't know what you guys would add.
I would add that also it really depends on how successful a large company has been in a certain therapeutic space. So for instance, if you're company X and you've been in oncology and the last 6 or 7 products you've tried to bring through the pipeline have not been successful, you tend to have these off-site strategic meetings with senior management and your board, and you decide that's not strategic for us anymore. We're going to unload these assets and go elsewhere. So part of the answer is leadership. It's what the leadership of the company wants to do, what the board and how successful they've been. You brought up Gilead before. Gilead's been exceptionally successful in the virology space and not so successful in some other areas, oncology or pulmonology, to name a few, cardiovascular. They've tried to dabble and diversify, but yet I think they will rebound in virology. They always do. They always figure, because that's their expertise. Likewise, some companies have decided not to compete against them in that space because they have such a stranglehold in the virology space. So I think when you're looking at M&A, you should also look at leadership and decide where their core strengths are. And you need to see not just the C level, but where people are moving around. Some folks at the VP, senior VP level tend to move to other companies and they acquire all this knowledge all of a sudden, and you're going to start seeing some M&A activity there as well.
I mean, building on that a little, the other thing we've noticed is even if it doesn't make strategic sense, there's a question of how important is it to the revenue, how much time is it going to take from senior management to actually think about spinning something out, and is it even worth it?
Right.
Which is why these carve-outs, you know, while great in theory, can take a while to play out because it takes the right leadership, a certain financial performance to get motivated to act.
Got it. So the pharma and biotech industry's use of royalty or revenue interest financing as a means to fund everything from clinical trials to acquisitions, as opposed to raising equity or traditional debt. Can any of you comment on that kind of approach?
It's a brilliant idea. The only thing is that if you give up something early, then you don't have the upside later on.
Yeah.
So I think it works very well if you have a large portfolio and you can afford this, basically. So it's a very good point. And it certainly will be used going forward in many cases. But if you have a very small, portfolio, then this will basically mean that you give up the entire upside, and you're gonna trading probably like a bond going forward because you have not this upside. And I understand that investors wants to have the biotech company to really basically become very, very big and successful. And so you want to basically do this rationally. And everybody should always look at creating value. So you want to make the decision always based on what would create more value.
Okay.
I agree completely. I think it really depends. All the boards that I've ever worked with or on or for will tell me we don't want dilution. So this is a great vehicle to create a non-dilutive type of activity. But I agree, you might lose your value on the back end. Being in a small company, that's all we're about. Biotech is all about dilution. I mean, that's just a natural course. But there are several vehicles, debt being one of them. Some boards don't like that. I think you've got to make a decision what's best for your company. But I agree with Christopher. If you've got a good portfolio and you've got other compounds that people are going to be attracted to later on, then something like this makes perfect sense.
So, I mean, at Donnelly, we've seen, companies staying private a lot longer than obviously they have historically. I think that's general across the board. Are there any areas in pharma that we're seeing this more relevant? I mean, more often than others?
Again, I think it depends on your investor base, right? If you've got some large PEs or some VCs that are in, big institutional investors who are getting hammered in the public market, they might want to take you private just so that you can hold on to some of your funds and they have a long-term commitment. Running a publicly traded company, which Christopher and I both do, it's not easy. It's expensive. It's tough to raise some funds when you need them. Not all cash is the same. It depends on timing. It depends on who you take it from, and those are difficult decisions to make. Likewise, when you're private, I've run private companies as well. It's also depends on who's on your board and who's telling you what you need to do. And sometimes on the private side, everyone's an expert. And even though you might have 30 years of experience, they tell you you don't know what you're talking about. So it really depends on what the outcome is going to be and how supportive those private investors are going to be, whether you decide to stay private.
Got it. So generically speaking, can you just comment on the competitive landscape, for the pharma industry? Are there any areas we're seeing a lot more competition, any that may have slowed down the past year?
I mean, I think, again, a competition is pretty fierce across the board because while we might talk about certain categories being particularly interesting like oncology and immunology, we're also talking about a wide range of other categories, right? Virology, neurology, et cetera. And so for any given company, each of those therapeutic categories is going to be important. And so whenever there's an investment opportunity, I would posit that a few people are going to come to the table. And if you're talking about a real gem asset, then even more people are coming to the table. And I think we've seen that with the bid ups of a number of these companies, right? Where they're baking off a couple of big pharmas to move up the price because there are a few strategic gem assets out there that people have really wanted to own.
I think it's always data-driven. If you have a very good data of a new target, which works extremely well with a low side effect profile, this will become very interesting and competitive. And the same is with oncology, where you have the CAR T or immune stimulation, PD-1. You have to always see that what really works, and it's always data-driven. So data will always determine, where the interest is and what will pick up.
So we've seen a number of tech-focused venture capital firms dive into the tools devices arena over the past couple of years. Do you expect to see the same activity in biopharma or just pharma in general?
I did mention that before. We are using a lot of data mining of our trials, which we just did with our lead compound Anavex 273 in Alzheimer, and that's very much really deep diving into data. So I would agree that this is really important.
I think the FDA is getting very involved in this as well, because tech is just growing by leaps and bounds, and they're trying to get a handle on how to use this technology as well. It varies from patient recruitment to data mining, as you say, to marketing. How are they? You've got divisions of the FDA that watchdogs over what marketing messages are going out. How do you control that in the digital age and the tech aspect? So I think you're going to start seeing some regulation come across that you haven't seen before with these technology companies. I'm not sure they know what they're in for, but because the FDA is tough, and as well as they should be to protect patients, and I think you'll start seeing more mix of that as well.
So, looking at deal size, we've seen Series A deal sizes more than double since 2013. What might this indicate for the industry in general?
I think it indicates a willingness to lean in early on promising assets, right? And so I think there's a recognition that competition is fierce. It gets fiercer as you get further through the development cycle. And so pick your spots, lean in early, and pay up is I think, thematically what that data would say.
I think it speaks about the industry's focus. So before you had basically small A transactions, round A transactions. Now you really probably have less but more larger ones. That's what I have seen and noticed. And it speaks to the focus, more due diligence, and I'm sure it will take longer until decision is made. But I think that's the direction to put more muscle behind a project.
So James, we see some retail investments in life science. Can you comment about opportunities for institutional investors in life sciences?
Well, there's a lot of opportunity, but again, it depends on what their strategic focus is going to be. I think the institutional investors are coming back. I think they've taken a step back, and 10 years ago or 8 years ago when the crisis hit. But I think they're starting to come back. A lot of them pulled some money out of the life sciences area and went to tech and went to other areas where they thought they could get a better return for their portfolios. But now they're starting to see, I think Kara spoke to before, biotech is starting to come back up. I also agree, you're seeing these large deals because of the opportunity that's out there. Pharmaceutical companies are fairly intelligent folks that work there. They wouldn't make those investments unless they saw the opportunity. Larger private markets, China, India, more payers, more people coming to the table. Every decade, the average lifespan around the world increases by a year or two. People are living longer. They're investing in more neurological type diseases, and you're going to start seeing bigger deals. And I think the institutional investors are going to start jumping in with both feet.
I would layer on to that if you think about just where we are in the economic cycle and an odds of a recession in the next 5 years even. When you look at industries and say who are more recession-proof, right? Pharma in many ways is as good as it gets, right? There are different exposures, different levels of risk, right? Regulatory pipeline, et cetera. But from an economic cycle risk, it's a very different equation in pharma than your classic industrial business or even some of the technology businesses. And so I would agree that there's a lot of opportunity for institutional investors, but you've got to pick your spots right, and you in some ways have to have a heavy stomach if you're investing in some of these earlier stage, because they may be single product exposed and there can be a lot of volatility when data comes out.
And I would just dovetail one because you just brought a great point up. Institutional investors back in the early 1990s, the 2000s, they were in it for the long haul. So if they have a 10-year fund that they're trying to manage, they would be in a company for 5 or 6 years and get their return that way. And then all of a sudden, late 2008, 2009, that timeline became much shorter and squeezed down. And that's, I think, why you start seeing a lot of mad rushes to the exits. I think institutional investors are becoming more patient now. It's a longer play. And I agree, they're picking their spots for that longer play.
Got it. So we're running into our last few minutes. I want to grab some audience questions. What kind of activity do you expect to see from crossover investors in biopharma or pharma?
Well, she works for one of the best crossover investors.
I mean, can we? I don't know if there's any more detail in that question.
There is not. No. We can. Well,
so I mean,
in 2016, we did.
I think I understand what the question is. It's just this general notion of thematically we've talked about more, general technology funds investing in biopharma, more crossover funds investing in biopharma. Do we expect that to persist? I think that's the question, and I think we would say yes. I think as everyone is looking at the attractiveness of the biopharma industry and wanting to have a part of it in their portfolio, again, picking their spots, but I think you're going to see more of these crossover investors looking at biopharma as well, and I think the data trends over the past 5 years would support that.
Got it.
Isn't the question more private versus public crossover? That's what I would understand as the definition of crossover. So basically, companies' investment into private companies versus investment in public companies.
Yeah, exactly,
right? Yeah.
Yes.
Well, I assume that the exit is a question, right? If you're public, you have an IPO, you can sell the shares on the open market. And if you're private, the only exit is a trade sale. Otherwise, you have a...
Right.
So that becomes a bottleneck. Then obviously, have a public company before you have a private company. I would assume that would be...
Right. But when you look at the mix of exits and say half of them are IPOs, half of them are to big pharma, if you don't get in crossover, you might miss that bucket of opportunities. Yeah. Which would say maybe I should lean in and do some of those deals.
Both are things you cannot force, right?
Right.
Yeah.
So we have another audience question. In the latest of activist situations, Perrigo today settled with activist investor Starboard. What role will activism continue to play in the sector, and is this a good thing? Anybody want to?
Well, why don't I just give a simple CEO answer, okay? From a CEO perspective, gosh, they're tough to deal with because sometimes the activist investors are forcing decisions that they think is good for them, not necessarily the best thing for all shareholders. So I think it's a tough mix. It depends on who's on your board. But I think they're going to continue to play a very, very important role moving forward. Sometimes you're not even sure that you have an activist investor on your board. They put some folks on your board or push for it. So it's the same in private companies and public companies. It's always going to continue, and I think it's going to get stronger.
I think it depends really on the quality of the management. If you have a good management team, the shareholder should be happy because the results lead to creating of shareholder value. If you are, not as good as a team to create that value, you might attract some outside, activist groups. So I think it correlates with your performance.
Mm-hmm. And I think we would say there's enough of that spectrum of performance out there that activism absolutely has a role to play. And I think that there is, when you take an activist look at any one of these companies, there's a lot that can be done strategically in terms of, again, focusing the portfolio, and operationally in terms of, in some ways pharma makes so much profit. Have you thought about how you optimize your go-to-market strategies or your cost structure? And so there's all those different elements an activist can look at, which again, at different size companies makes more sense than...
I completely agree. And my experience with some of my friends and myself, some activist investors are great. I mean, they're very helpful, they're very insightful. They introduce you to some great opportunities that you probably couldn't have not found on your own. Mm-hmm. So it really depends. I agree, there's a wide spectrum of the type of investors that are out there.
So we can try and squeeze one more in. As pharma is increasingly fully outsourcing R&D, how can they still be true to therapeutic specializations if they are ultimately defined by what the capital market is willing to finance? Anyone?
I think the question is specialization or proprietary, knowledge. Mm-hmm. That's what I was thinking. So if you outsource all your activities, there is no real proprietary knowledge anymore for that future. The other thing is that if the question is about you can outsource everything, so you don't have to be specialized, which does mean that you don't have to be knowledgeable about something specifically. That's basically like a little bit Chinese menu. You just take the flavor of the month or the flavor of the day. So I think that's the other way to look at it. So I think that for the first part, I would answer absolutely true. You do need some specialization, because you do always need, as a company, some proprietary element. So we have, for example, our proprietary element, which is running trials and executing trials. So this is what we consider a specialty of the company, and we cannot outsource that. So we have that in-house. So other companies might have different specializations. Mm-hmm.
I mean, again, I agree, and I think it fits with this whole notion of category leadership, right? Knowing how to diligence and then acquire an asset early on and take it from earlier stage to late stage requires some level of capability in that. Knowing how to reach the patients, to reach the prescribers, to work with the payers in that certain category makes a difference. And so even if you're going to do more business development than internal development, I would still argue you need to have a strategic focus.
Great. So can someone comment on the 21st Century Cures Act with respect to seeing it as being helpful or not helpful?
I think we covered already pretty much some relevant parts of it already, right?
We did. I think, let me just reiterate, I think maybe some of the points to answer the question. Maybe the person didn't hear our answers, but I think it's very helpful. I think what was clear when some of us went down to Congress over the years to talk to some folks is that the congressman didn't really understand the different types of sectors within the pharmaceutical industry and why we needed more funding for the FDA and why we needed more funding for the NIH. And I'll just stop at those two elements of the act. It's a multiple segmented act. There's a lot of things in that law. But those two elements are going to be very purposeful for patients. There's also an element for patient advocacy in the 21st Century Cures Act as well. So patients will have much more of a voice in terms of which products need to move forward. And that really, it's happened in certain sectors such as oncology and HIV specifically, but this is going to give a voice to all types of different therapeutic areas. So I think it's a very positive act, a law. The problem is there's a price tag associated with it, and we'll see what happens with this administration when they're looking to curtail anything that the previous administration put forward. But I can tell you unequivocally the 21st Century Act was approved almost unanimously, but both sides of the aisle were very much behind it. So hopefully this is something that continues to move forward.
Great. Well, I appreciate all you guys joining us today and for all of your thoughtful insights. Today I've been speaking with James Saperstein, CEO of Contingent Pharmaceuticals, Kara Murphy of Bain & Company, and Christopher Missling of Anavex Life Sciences Corp. Thanks for watching.